Welcome to the Army Roundtable. Today is the 26th of June, 2019. So welcome. We've got Himanshu as our guest today. And I've known Himanshu for, geez, Himanshu, how many years is it? It goes
A
back a
lot.
long time. Yeah. And Himanshu has been known as the king of calendars. There was a nice article written up by John Sarkett for Stocks and Commodities magazine. And you've been trading a long time. Everybody understands that you're the calendar master, and yeah, your trading group's been very popular and diehard fans. So I think they requested that you do some kind of mentoring. So that's what this is all about. Um, I guess do you have a disclosure? Or do you want me to read something?
Yeah, the same disclosure that belongs to Aeromir because essentially,
Okay, well, I'll just real quickly, Aramir is not a broker dealer or an investment advisor. This is for educational purposes only. Options and futures involve risks and are not suitable for all investors. Past performance is not indicative of future results. And our disclosure, it'll be on the video and also at the bottom of any of our web pages. So um, that's it for that. So I'll turn it over to you. I'll put myself on mute in case our parrot starts making noise. It won't interrupt us. And yeah, take it away.
oh, now you have parrots. I thought there was only one.
Well, it's only one, but he makes enough noise. So.
Okay. Merlin, right? Merlin.
Merlin, yep.
Yeah.
Yeah, he'll be 18 next month.
Oh, really? Okay, cool. Excellent. All right, guys. Hopefully you all can hear me. Can you all hear me?
I think they
Somebody
can.
say yes. I know you can hear me, Tom, but
Well, if I can hear you, they can hear you.
okay, that's good to know.
Yep.
All right, well, here's a little bit about me. My name is Himanshu. I'm a chartered market technician. I've been trading options since 1998. I first learned about it in 1990, right when the first Gulf War started. Uh, and here are some of my favorite quotes. One of them is, don't do something, just sit there. Which could lead to colon cancer down the line. But essentially what I mean is don't do something, just be. Laziness is a virtue, which really is, and simple is usually better. And you will find out soon enough how simple trading can really get. So I call myself, the whole thing is a holistic trader thinking, and essentially we are incorporating the concept of holism, or the idea that the whole is more than merely the sum of its parts in theory or practice. So for example, if the market as a whole is moving up, why the hell would I short it? But we still do. And we'll look into that further down the line. So the question is, how do I know which way the market is moving? And obviously the answer to this is very simple, and that is CNBC, right? But no, that's not the answer. The answer is technical analysis. And the smallest brick in the entire edifice of technical analysis is called price. But what we are really looking at is what is commonly referred to as price action. Now, those of you who have heard me before, I'm sure know exactly what I'm talking about. But for those of you who do not, what exactly do I mean by that? We know that price can only move up, move down, or move sideways. And our goal is to be profitable in all scenarios. Everybody with me? Everybody agree with this? Yes, no, maybe?
Yes.
A lot of people are saying yes. Larry's saying yes. Oh, yeah, I remember Larry. Preston is saying yes. Okay, that's great.
Well, Larry is saying yes that he could hear you.
Okay. No, he has heard this before. So as I said, our goal is to be profitable in all three scenarios most of the time. And this is where we screw up. Because in our mind, we somehow think that most means all. In other words, we literally think that we need to win every single trade all the time. And when that doesn't happen, it quietly starts beating us up. And I know that for some of you, this may be a new concept, that your own mind is beating you up, but there is proof that it does that. But anyway, so it beats us up, and over time we get used to it. We get so used to it that we keep on doing it. The losing trades become the norm. But we still keep on doing it, and once in a while we get a winner, and that winner gives us a rush. Those of you who have ever been addicted know exactly what I'm talking about. And I'm not talking about substance abuse either. Like, as we were, Tom and I were just talking before we got online, is when, if you have ever been a video game addict. Today people are addicted, as we were just saying. I have literally seen 5 18-year-old girls sitting in a cafe, and nobody's talking to each other. They are literally texting to each other. Why do that? But still they do it. And this addiction is because your mind is not in your control. So the real question is, how do I retrain my mind? Now, maybe some of you have asked this question to yourself before. I know I hadn't until something happened, and I'll tell you about that in a little while. But in truth, none of us really ask this question. We just take it for granted that our minds can never be wrong, period. But even when the results of our trading, or anything else for that matter, I don't know, I mean, it's like, well, let's just go ahead with the trading part. Even though out of 100 trades, we have lost 90, we still think that we know what we are doing. So, or if it thinks that something is wrong, our minds will go ahead and sort of convince us that all we need is a better strategy. Seriously, if I can only find a better strategy, I would make a killing. Am I right? Somebody talk to me.
Yep. People are always looking for the better mousetrap.
Exactly. Everybody of us is looking for a better mousetrap. But as far as trading goes, we are only looking at a set of rules. We are not following the rules to the letter and still expecting to be successful. But one day I realized that this is what I was doing. And this is the first time, honestly, that I have actually yelled at myself and called myself an idiot, because it's generally rather demeaning to look at yourself in a mirror and calling yourself an idiot. And this was when I had realized that it was not the strategy that was screwing me up, it was me. And some of you may have experienced this, but I hadn't until this point. At this point in time, literally, my mind was appalled. It was in shock. It was not because I had finally figured out the truth, but because my mind was losing control. I had figured out that it does not want the best for me. And now begins the war. I mean, Tom probably knows what it feels like to be in a war, but most of us don't. But either which way, this is a war that you will lose, guaranteed. I can put $1 million on it. This is a trade, or this is a war that you will lose if you don't change. And that's what all of this is all about. And therefore, now for something completely different. So let me show you this. The year was 1984. I know most of you don't remember that year. There were two traders by the name of Richard Dennis and William Eckhart, and they were both neighbors of Tom. Our Tom Nunamaker. In other words, they were both from Chicago. They were vacationing in Singapore and they visited a turtle farm and got into a discussion about what it takes to be a successful trader. Some of you may have heard the story before, but for those of you who have not, this is interesting. So Eckhart actually believed that they had a gift from God. Dennis believed that we are all equal and that anybody could duplicate their success if they were taught. Now, some of you may believe in the first camp, be in the first camp, and some of you may be right here with Dennis, but let me prove it to you. So they decided to have their own bet. Nobody knows how much the bet was for, but since they were both millionaires, it could have been substantial. So, and this is a true story, by the way. I'm not making all this stuff up. So they placed an advertisement in the Chicago Tribune and USA Today asking for people interested in learning how to trade. There was only one caveat, and that was that these people, anybody who applies, should not be in the financial industry. And hundreds of people applied, from primary school teachers to professional chess players and everything in between. And after a month of talking and interviewing with them over the phone, they selected 20. Everybody with me so far? So then, these 20 were then asked to come to Chicago, and they were trained over a period of 2 whole days on this system. It took 2 whole days because most did not even know what commodities were, nor did they even know of the concept commonly referred to as selling short, and most didn't even know what a price chart was, for that matter. But they were trained, and then each was provided with a paper money account and was asked to trade no more than 2 markets or instruments. Their results and their performance was monitored. Quite a few didn't make it, naturally, but those who did were provided with a real live money account and asked to trade. Now that it was real money, quite a few couldn't quite cut it, literally. They were like, oh my God, I can't press the trigger because there's money involved. But a few of them eventually went on to trade massive amounts of money and eventually started their own firms. Some even showed up in Jack Schwager's book called Market Wizards. Just as a side note, in case you all haven't read that book, it's really worth reading. And it's not like he just sort of knew them. He literally called them up. He traveled to where they were. He personally met them. He interviewed them and wrote about them in his book called Market Wizards. It is really a book worth reading. Another book worth reading is The Disciplined Trader by Mark Douglas, since we are talking about books. He too got in when the market was making new highs every day, and he literally thought that he couldn't lose. He was like 24 years old, and he was having the time of his life until he did. He also didn't fade away. He had a degree in psychology. He sat down, realized what he did wrong, and then he wrote, I think he has written 3 books. And in this book was the first time that I personally read that the strategy is only 20% of the whole enchilada, so to speak. The other 80% is you. And all of us just focus on the strategy, right? Every one of us is like, just give me the right strategy and I will make a killing and then go buy me an island in the South Pacific. Now, I remember having gone through all this. I also thought that all I really needed was a great trading system, and then I was done. And even though I had like 20 trading systems in front of me, I obviously was not trading them properly. So now, again, for something completely different. By the way, is everybody with me so far? Any questions? Yes, no, maybe?
Preston's with you. Me too.
Okay.
And
Still
yeah.
with you.
Okay.
Oh, David is
Still
saying, okay, excellent. So what Tom and I are proposing is not a trade alert service. We are actually proposing a different kind of things where you will learn the strategies and I'm talking about technical strategies and the various option strategies, you will learn to formulate a plan for each one. And then we will trade these together as we execute the plan for each one of these. In other words, together we will look at the various markets, technically decide whether we are bullish, bearish, or neutral, and make a plan and then place the trade. If we are right, we will make money. If we are wrong about the direction, we will need to make an adjustment to the trade, right? You know all of these things anyway, but these adjustments will already be available in written form beforehand. And because, and this is the most important part, and because you seriously don't want to open the user manual for your AK-47 in the middle of a bloody battle. But we do that, don't we? So the most important point here is that you will learn to trade all of these without giving up your current source of income. Remember, this is not day trading where you sit in front of your PC for like 6.5 hours every single day. You learn to trade like the professionals without giving up your current profession. So far, making sense? And of course, without becoming dependent on others and without having to go on a mission to search for the Holy Grail. Because by the time we are completely done, we will figure out, you will know what the Holy Grail really is. So now, as I promised earlier, I am going to give you some technical strategies. Trust me, these technical strategies work. They are, and this is how our minds do work. They are so simple that the first thing that your mind will say is, this can't work. And then you will be off to find something else more complicated. And then you will find something else more complicated, and you will use it, and it won't work, and you will continue on your search. So here is the turtle trading strategy. You all don't have to write this down. If you want, I'll give you access to this presentation, or there are quite a few books written by especially one of the turtles who was from Australia and who got kicked out because he was cheating, but he's written a book on it. So here's the turtle trading strategy. And you will realize the simplicity of this when you see it. Now, this is mainly used on futures, okay? They use it on oil, gold, silver, and then E-minis, but quite a few people currently are using it on penny stocks, literally penny stocks. So here's the strategy. On a daily chart, you will look for the underlying to make a 40-day high or a 40-day low, which means the highest high in the last 40 days or the lowest low of the last 40 days. When you come across such a day, you will buy one contract of either oil, gold, silver, E-minis, whatever. You will set the stop loss at 1.5 ATR. ATR stands for average true range, just in case you don't know. So in Thinkorswim or any of the charting software, you can literally put ATR, and this is, by the way, ATR of the last 20 days. So this should really be ATR, 1.5 times ATR of the last 20 days. And you keep on trailing this until you are stopped out for a win or you lose right away. And this is it. This is the turtle trading strategy, which incidentally has a win rate of literally 31%. In other words, more or less 7 out of 10 trades, you will lose 1 ATR. But when you make money, you will make tons.
What's the trailing stop? Is that the same 1.5 ATR?
1.5 ATR, yes. You just keep on trailing 1.5 ATR below every single bar on a daily chart.
And you always buy, buy/sell. Okay, so if it's a new high, you buy, new low, you sell.
Correct. So you can go short beforehand already, or you can buy. And they had other additional things where after it moves up by 1.5 ATR, you buy the second contract. And if it goes up by yet 1.5 ATR, you buy a third contract. While trailing all three 1.5 ATR below the 1.5 ATR of the first contract, as opposed to the second and third as well. And this is it. This is all they did. The win rate is 31%, which means literally if you do 100 trades, on average, you will win 31 of them. The other 70, 69, you will lose 1.5 ATR. Now, what happens, as I said earlier before, most people will not really do well with these strategies because every time you lose, your mind will get up and tell you that you are an idiot. And then you will believe it. Because, I mean, this is very serious in the sense that, if you put on a trade and you lose, then you put on another trade and you lose, then you put on a third trade and you lose, and a fourth and a fifth and a sixth, chances are that your friend, your spouse, your kids, your parents, they will all tell you that you are an idiot because you are doing the same thing, but you are continuing to lose, right? But yet, those who actually followed this system went on to make millions. And because it's on a daily chart, they literally looked at the chart after hours. They would put a resting order in the markets and then walk away. It would either get filled the next day or not. And that was it. And because this thing is so simple, most of us won't actually use it. And because we won't use it, or even without using it, we will actually tell ourselves that this is, too damn easy to do anything. But right now, even today, there is a guy who trades penny stocks. He trades stocks between like 30 cents and $5. And instead of 40-day high or low, he looks at 3-year high or lows. Literally. It's a stock that is just ranging for 2-3 years, and then when it breaks out, he buys. And he is doing very, 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 very well. Now, here is yet another strategy that I personally have used very, very well over a significant amount of time. And this can be used on any instrument, stocks, commodities, index futures, Forex, whatever the case may be. I first heard about this because there was a guy, a young kid from Melbourne, Australia. He was actually working in a winery. And because Australia is in such a weird time zone, when Europe is at 8 o'clock a.m. in Europe, it's a very weird. This guy is already at work or he's asleep, one way or the other. He is not available when the market opens. So he would just look at this over the weekend or at night on a daily chart, and he would then go ahead and put on a trade. So here is a pin bar. A pin bar is a bar where the body is significantly smaller than the tail, whether it's a bottoming tail or a topping tail. So if it is a bottoming tail, then you essentially will go long 1 pip or $1 or 10 cents above the high of this bar, and your stop loss is right at the bottom of this bar, and at the end of every bar you will move your stop loss below the previous bar. So when this bar begins, your stop loss will be here. When this bar begins, your stop loss will be here. At the end of this bar, your stop loss is here, and eventually you will get stopped out over here. And I know that this looks like it is very simple. And there is a reason for it. It is very simple because it is very simple because it is very simple. Now, this young kid that I'm talking about, he used to use it on Forex on a daily chart because he was just never in front of his machine. He was at work. But if you were to look at this, the same thing on a weekly chart of whatever you care to look at, you will see the same thing. For example, this is, what the hell is this? This is Twitter. Now, see, here is a bar that looks identical to the one that I just showed you. The high of this bar is 38.12 and the low of this bar is 34.62. So you are literally a $4 stop loss. Remember, this is a weekly chart. And now you buy. In our case, of course, why would we buy stock, right? We know about options, so I would buy a call. And then all I have to do is wait for it to either go down below and bail out of the call, or wait for it to go from, what was it, 38 something to 53. Even if it was an out of the money call that you bought for a measly 50 cents, guess how much you just made? On that 50 bucks, you easily made 10, 20, 30 times. Now, I can literally hear some of you thinking right now, and you are saying, it can't be this simple. Seriously, how many of you literally think that it can't be this simple? Okay, Otar Frank is saying that the win rate is only 29.8. Oh, okay, could be. I have never traded it. But even with a win rate of 29, when you win, you make 3, 4, 5, 10, 15, because we are trading options, we can easily make 100 times more than what we put in. And when we lose 1. In other words, whether you are trading stock, options, futures, forex, whatever it is, when you lose 1 bar. When you make money, you are making multiple bars. Now, I have found out that just about every candlestick pattern works a whole lot better on a weekly chart and a monthly chart than a daily chart. For some strange reason. I do not know why, but it really, really works very well. So this is one strategy, right? This is one strategy where if you look at a weekly bar, I don't know. I mean, if you guys want to look, so let's say we look at SPX, right? Because we are option traders, right? Well, here we go. This is a weekly chart of SPX. See, here is a pin bar, beautiful pin bar close to the bottom. And then it goes from 2681 to a high of 2941, literally 400 points. Again, this is a weekly chart, so it took maybe 7, 8, 10, 15 months to get here. But you are still in that trade. And this is where the fun part comes, where once you go long and you start seeing market go down back to touch your 20 period or 10 period moving average, whatever it is that you care to use, now you are selling calls against your long call. In other words, you turn something into a calendar or a diagonal. Or you started out with a butterfly. And can you imagine if you go long somewhere here at the end of the pin bar, the price is 26.85, you go all the way to 28.02 and put on a butterfly here. A 20-point wide butterfly that will cost you, because this butterfly is like close to, well, I don't know how many, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So you will maybe put it like, say, 3 months out. And because the time value will make it more expensive, it is irrelevant because the amount of money that you will make on that butterfly will be like 6, 7, 8, 10 times of what you put in. Is everybody with me so far? Everybody's unusually quiet, except for Preston. Preston is replying back to me. That's good.
We're here.
So, what did we go? We went over the turtle strategy. You all saw it. You probably will try it out. Do that in a paper money account first. Here's a strategy that I just showed you. Now, again, a lot of people will say, well, do I need to put on a 20-week moving average? To be very honest, no. Put on a 10-period moving average. Well, guess what? It still works. You are long here at 2731 goes to a high of 2793. Of course, you need to have your own rules as to, okay, you will take some of your calls off at 10%, you will take some more off at 20%. At certain point in time, you will go to break even so that you can't lose at all, even if it drops like a rock like this, or it drops, more importantly, drops like a rock like this. Of course, this is a weekly chart, and it took an entire week for it to go from 2880 down to 2708. That's 112 points, and then back up again to here. So any questions? Remember, these are real strategies that you can start using tomorrow. No question. Oh, one question. Oh, not a question. So no questions. Here we go. Yet another strategy. This is called the inside bar strategy. And this is a strategy where you go long and short both. Or at least you are ready to go long and short both. So what will happen is that every now and then you will get a huge bar. Like, for example, this is like a massive weekly bar, right? Or a daily bar. You can even go with a daily bar. Doesn't this works on a daily bar or a 4-minute? Every strategy that I show you here will work on any time frame. It'll work even on a 1-minute chart, which I'll show you in a little while with E-mini S&P on a 5-minute chart. We'll see something. So the second strategy, well, the first was the turtle strategy. The next strategy was the pin bar that I just showed you, and this works very well on a monthly chart as well. The next one is the inside bar strategy. The inside bar is a bar that is completely within the previous bar. Yeah, this bar is this big, and this bar is completely within the range of the previous bar. So this is called an inside bar. So when you see an inside bar, and this is the best part, you don't have to do this in real time. This is a weekly chart on a Saturday morning with your coffee. Throw the newspaper out. Don't read newspapers because you will just get in trouble if you do that. Or if you go on sites like news.google.com or Yahoo or whatever, don't do that either. Which is yet another strategy that I came up with. Inside bar, right? The inside bar strategy is not something that I came up with. I'm talking about the news part. That is a strategy that I came up with. So inside bar, when you have an inside bar, this is what you do. Whether it's a weekly, daily, 4-hour, doesn't really matter. At the end of this bar, on a Friday, you know that this bar is ready, right? On Sunday night, before you go to bed, you have a pending buy order 10 cents above this, and you are buying a call at the money call, and 10 cents below this, if it goes below this, you are going to buy a put. The next week, your call never got triggered. You bought the put at 27.45, let's say 27.40. And then in 1 week, it went all the way down to 26.26. So not much, 26.45 to 26. So it went down by 120 points. Your at the money put just exploded in value. And the best part about this inside bar strategy is you do not even have to buy a call or a put 2-3 months out. Just buy something that is just 3 weeks out. Because in the next bar, most of the time, you will make your money. Literally, in the next bar, you have made your money. Or at least in the next 2 bars. Like, for example, see here, this tiny little bar, it's an inside bar. It's completely within this. I think it is. A high is 27.42.24 and 27.42.1. So no, this is not an inside bar. But if it was, it would have worked beautifully. But let's look here. See, here we go, inside bar. It opened up here. So you got filled on the call. It went from 27.58 to 27.86. So your call made money. And if you are trailing your stop, as it starts coming down, you made money on your call, however little. At least you didn't have to pay the commission because you made that money back. Then it dropped like a rock. And then you got filled on the put side as well at 26.95. And then it went all the way down to 26.46. That's almost 50 points in a span of 1 week. And your at the money put literally is now so deep in the money that you have made quite a bit of money already. Everybody with me so far? Now, okay, here you go. Lloyd, oh, hi, Lloyd. How volatile stocks do? Well, okay, that's a great point. Try not to do this on stocks like AT&T. Like say, in AT&T, well, actually, to be very honest, because you are doing this on a weekly chart, it probably will work on AT&T as well. But in AT&T, I would actually do something slightly different in the sense that if it is moving up, instead of buying a call, I would just sell a put spread. Instead of buying a put, I would just sell a call spread. See, here is an inside bar. If it goes below this, I am selling a call spread up here. Again, you will make like maybe 20 cents on a, actually AT&T has got multiple 1-point strikes. So you don't have to have a 5-point strike. But even here, like, see this is a beautiful pin bar. Look what happened. Even for AT&T to go from 28.87 to 31, that's a huge move for AT&T. So personally, I would prefer that you don't, I personally would not trade this. But the point I'm trying to make is that it will work even on very slow moving stocks as well. See, here is a pin bar, beautiful pin bar, almost a doji. And then it goes from 31.83 to a low of 30. That's a huge move for AT&T. But, I mean, if you were to use it on something like Tesla, you essentially would get a significant larger bang for your buck. Here is a pin bar. Here is an inside bar. So you are short below 10 cents or $1 below this. You are also buying a put a dollar or 10 cents below this. Now you have 2 puts. It goes from 349 to a low of 310. And you just bought puts that were less than 30 days out. So your negative delta and your highly positive gamma just exploded the value of those puts in this 1 week. I mean, literally, that put of yours, it's like, literally, it's like winning a lottery. And look, here's a pin bar, beautiful pin bar, but though I would have preferred it to be red. It's like, I call it an A+ pin bar as opposed to just a pin bar. But, and this is something that I want to show you, a lot of us look only at individual bars. But there is nothing to stop you from looking at multiple bars, right? If you look at this and this bar together, then essentially it opened up here, it went all the way over here, and then came back down here. That's a pin bar. And if you go below this, you went from 321 to a low of 286 in 4 weeks. Am I making sense? And it doesn't even have to be 2 bars. Look at these 3 bars. It opened here, went all the way down here, and then closed here. So if you were to combine these 3 bars together, this is a mind-bogglingly great pin bar. And if you go high at 211.62, and it went all the way to 234 in a span of 2 weeks, your out of the money call just exploded in value right there. Now, I bet that right now, a lot of you are literally saying, yes, I'm seeing this with my own eyes, but it just can't be this simple. Honestly, how many of you are actually saying that? How many of you are actually looking around to see, let me prove this guy wrong? Heck, I will prove you wrong right here. Look at this. Here's a pin bar, right? But this is a pin bar to go short at the bottom of a trend. Now, here's the fun part. Write this down. When you see a technical indicator that says that you should go further short after a long downtrend, you do the opposite. You go long. This is just the big boys trying to con you into going short so that they can sell you the puts that they are selling right now. Because the next week, those at the money or deep in the money puts just went worthless. Am I making sense? Any questions?
Doesn't look like any new questions yet. Oh, what type of stop loss? Larry has.
Okay, great question. So let's look at a pin bar. Here is a pin bar. Remember, we are buying options here. So this is, assume that this was an A plus pin bar. Okay, in this case, this is an A plus pin bar. So when prices go touch 249.52, what is the low of this bar? Low is 350.76. So let's just say 350. As prices close below 350, or even on a 1 minute chart, when prices go below 350, you will be buying a put at a previous low, which is at 325. So you will be buying the 325 put when price is at 349.50. And this put will be maybe 2, 3, 4 weeks out, no more. Because remember, the further out you go, those puts are expensive, especially since you already had a couple of down days here. This is a weekly bar. So 2 or 3 days may have already gone by, and now your puts are expensive. So you are just buying a out of the money put, but close enough in time so that it will be cheap, but not so cheap that you think that, you know, your 10 cents is going to go to $10,000. Or you can go far out in time. You can go like, you know, literally this is December of last year, and it went all the way down till May, end of May of this year. So that is, well, that's literally 6 months out, right? So yeah, if you want, you can buy a put way out in time and way out in price as well. And I actually prefer to do that because guess what? As prices are moving up, my single put or my straight puts turn into, guess what? Anybody? IAPS is asking, well, actually they do, but again, since I already am looking at stocks with very high volume already. Let me go back a little. Thank you for asking that question, because I am so used to already having a list of stocks with very high volume that I completely and totally forgot about talking about the volume. So yes, you want a volume in a stock that is very high, like at least 1 million shares a day. You also want your what is it called? Your volume and open interest in the options themselves to be significantly high. Look at the option interest in Tesla, and 221. So somewhere right over here. See that? We our on both sides, calls and puts, and apparently the puts have much larger volume and open interest than calls, which, by the way, is another indication as to which way Tesla is going to move over the next 2 days. But if you were to go out, say, 23 days at 221, the volume on the put side and the open interest on the put side is 2,800 and 5,300. But on the call side, it is 16,000. 23 days from now, guess. And this is a yes, no, or up, down question. Guess where Tesla will be in 23 days. Will it be above this price or below this price? Just based on this, guess where it will be. Anybody? I heard somebody typing something.
Oh, that was me.
There
Sorry.
you go.
Above.
Oh, well, Larry also typed something. He said above. There you go. But Larry knows this because he's been hanging out with me every Tuesday for a pretty long time. But even otherwise, even if he was not hanging out with me, I mean, don't you think this is just simple common sense? At the money call literally is this high. But guess what? The 205 put, do you see the 205 put? Look at the volume here. 16,000. Do you think this will go up temporarily and then come back down again? Do you think this is like an infallible system? No, obviously not. But look at the IV, 66.65%. I wonder why. Maybe earnings are coming in July. I don't know. Usually that's when, well, but again, this is Tesla. For all we know, Tesla is this high implied walls anyway. But in our case, it doesn't really matter. Just because the implied walls are high does not necessarily mean that they won't go higher. If any of you remember 2008, when the market was tanking for the entire year, the VIX went all the way to 91. Nobody had seen that before, because this was the first time in the history of the VIX. I mean, you know, if the VIX was around in, say, 1914, then maybe something like this would have happened, maybe more, because I think the stock market itself went down by like more than 50%, more than 80% probably. This time in 2008, it went down by only, what, 31%? But the point is that we know what to do. We know what is good for us, but we don't do that. It's like, in fact, what I'm proposing, what I'm literally proposing is something like the Alcoholics Anonymous. You know that you want to stop drinking. You are trying hard to stop drinking, but you just can't, because somehow when you see a bottle or you smell the alcohol, you just go there and do it. I'm fortunate that it has never happened to me before, but I personally know a few alcoholics where he's like, oh, I'm just going to have one spoonful of wine. Literally, he says, I'm going to have one spoonful of wine. And you look away for 30 seconds, and that one spoonful had just literally, he has guzzled down an entire glass. in like 30 seconds. But it's, not his fault per se. It's just that he does not have a system that you need to follow come hell or high water. A lot of people are like the reason why most traders will not ever follow the turtle trading system is because taking 7 losses out of 10 wears you down. Psychologically, you just go into depression, I think. I mean, I have never traded a strategy because it's like, no, I want something faster. But there are many people who literally will look at a 5-minute chart and will watch for a range like this. In fact, I did say that we would look at 5-minute charts earlier, right? See, this is a 5-minute chart. This was a big downtrend in Tesla. Then Tesla went up, came down, and now it is literally, it never went above this high or below this low. So now it is ranging. It made a lower high, a higher low, a lower high, same low, whatever. And now if you had your buy stop right over here, it went from 221 to 222.59. Again, so yeah, it just made $1.30 on a 5-minute chart. Now, of course, you need to have a ton of money to buy 1,000 shares of Tesla at 221. But you don't need that for, say, E-mini S&P. So here we go. 5-minute chart of the index futures. And essentially, we are looking for a range. See, here it's making lower low, lower low, lower low, lower low, higher low, higher low, lower low. No lower low, no higher high. This is a range. It's as simple as that. This is a range. And now, if you go above this high at 2939.97, so let's just say 2940, and it goes to 2942.48. So you made 2.5. Let's just say you made 2 ticks. Yeah, that's $100 on one contract. See, it's ranging right now. There are many traders that I know who will look at the first 5-minute bar in ES or the Russell or NQ and will take out, and when it takes out the high or low of that first bar, they will either go high or low of, or either they will buy or sell. So if you do that here, this is a sell at 29.48, and 2 bars later it is at 29.41. You just made 7 pips in 10 minutes. 7 ticks, sorry. Here is another one. First bar, high low, goes below 29.55 to a low of 29.52. You made 2 pips. And essentially, to be very honest, all you need is just 2 pips a day. I know people who do this on futures, on a 1-minute chart, not futures, Forex, on a 1-minute chart. And this guy is a mind-boggling trader. And when I say mind-boggling, when you watch him, it's like, holy shit, I wish I could do that. See, he would have lines drawn here. As soon as after 3 bars it stopped, he's like, if it doesn't go below this bar, it's range. And he will say it out up front. And now it goes into a range, and when it breaks out, he's there. And on Euro USD, when you go from, say, 1.1366 to 1382, that's 15 pips on a 1-minute chart. That's $150 on a regular account. Now, even here, check this out. Guess what this is? A pin bar. You go short here, your stop is over here, and from 1.1375 down to 1.1372. Just 3 pips is all you made. 3 ticks, sorry. I keep on forgetting that this is not Forex. 3 ticks. Sorry, this is Forex, so pips. But my point is this, okay? If I were to show you something right now, and you will say, well, that was just a damn fluke. And that's fine. My point is this. See this yellow line in the middle? It's just a 10-period exponential moving average. If you were to have a rule that says when price closes above this bar, I am long, and I will keep on trailing every time after every bar that I made some money. So if you go here, or at the end of this bar, you have not made any money. You are at a slight loss. At the end of this bar, you are at a slight loss. By the time this 1 minute bar ends, you have made some money. So now your stop loss is not here anymore. It is here. At the end of this bar, it is here. At the end of this bar, you better get out because this is a pin bar. So did you make money on this trade? This is Euro USD. But you can do this on E-mini S&P. You can do this on NQ. There are people who do this on a $5 stock. Does anybody know a $5 stock? In fact, no, this is not a $5 stock, but this is a stock that I still don't know what this thing does, but this is Twilo. 1 minute chart. Closes above the yellow line. Remember, this is my golden line. And my golden line could be a 10 period, but if you feel that 10 is too fast for you, go with 20. Doesn't really matter. So 135.44 to a high of 136.11.
It's a Twilio, by the way.
Twilio?
Yeah, I use them as an SMS gateway.
Oh, okay. Huh. But this is it's an ADR. Is it a company? It's not a US company then.
I don't know. Let me look. Thought it was US, but maybe not.
No, well,
Doesn't matter.
as long as it works for us, we are okay with it. So again, guys, this okay. So this is Twilio. Here is a pin bar that I showed you earlier on a 1 minute chart. Not that I would ever trade a 1 minute chart on this stock, not because I hate the stock or anything of that sort, but I don't have the kind of money that you need to buy 1,000 shares. 135.33 to a high of 135.67. Almost 34 cents. If you had 1,000 shares, you just made $340. And as long as you don't live in California, in New York, or in some other big, metropolitan areas where the cost of living is too freaking high, you can leave off just this. If you make $200 a day in a span of 6 minutes. But, and just to show you that I'm not making all this shit up, let us suppose that you start trading this at 9:30 in the morning. So this is a Wednesday, 9:30 in the morning. It was below before, now it is above. You go to the high of this bar on a 1 minute chart at 138.02, you go long, your stop is at 137. So it's literally $1.02 away. And it goes from 138.02 to 139.50. That's $1.47. But again, as I said before, find me a $5 stock and I will show that this works equally well over there too. Now, the previous thing that we were talking about, look at this. This is a pin bar, right? You go 1 cent above the high of this from 136.24, it goes to 136.74. That's a lot of money if you have 1,000 shares on the line. But as I said, does anybody have a $4 stock, $5 stock? Preston saying, no problems, Preston, have fun. Okay, so here was a question. What is the definition of a pin bar in terms of body size versus the wick size of the candle? Great question, and I'm glad you asked.
Oh, and Lloyd has a $5 stock for you. Charlie
Who?
Tango Lima.
Tango Lima?
Charlie Tango Lima. No,
Oh,
it's a C. CTL.
CTL. Century Link Incorporated. Okay.
Oh, not 5, but it's low.
Yeah, it is low. Yeah, but this obviously doesn't have too much volume. But okay, even then, yeah, this is a range. This is the turtle trading system again. 20 bars range. When it takes out the high of this bar, you go long at 1081 and it goes to 1087. 6 cents on a stock that barely moves more than 10 cents in a day, approximately. But that's pretty cool, don't you think? And if there is enough volume, you can literally buy 1,000 shares and make $600 or even $60. But if you make $60 10 times a day, here's another one. This was in a range. You are going long at 1072 and then it goes all the way to 1093. Now you made 20 cents. But we are, as I said, we are option traders. I mean, yeah, you can do this too. And there are, in fact, I know a guy who trades, actually Sendix doesn't exist anymore, I think. Does Cisco exist? Okay, here's Cisco. I personally know a gentleman who does nothing except trade Cisco on a 5-minute chart every single day. And all he does is this. This is a 1-minute chart. He looks at a 5-minute chart. So let's go to a 5-minute chart so that I can show you what he does. This is the bar, right? Right over here, he will buy, but instead of here, had it gone down, right over here, he would have sold. So he buys at 56.70, it goes to a high of 57.03. So he just made 33 cents. Now, if you have enough money, or if you are, trading for a firm where what you really shell out is only 15% of what you really should be selling out, or the real cost of the whole thing is, you are essentially shelling out. Or if you are working for a prop firm, you yourself are not shelling out anything at all. 56.71 to 57.03, 33 cents. You have 1,000 shares. In 5 minutes, you just made $330. Right? Now look, here is a pin bar. This is a good pin bar, as we were talking about earlier. This is a pin bar that opened up here. This bar was completely green as it went up. Then the entire green was gone, turned red, and continued on down. This is a bar that tells you that the sellers are in control, period. No ifs, ands, and buts. At the bottom of this bar, 1 cent below this at 56.90, you are short. Your stop loss is at 57.05, which means 15 cents away is your stop loss, 15 cents. And now it goes down from 56.90 to a low of 56.44. Obviously, this is a 5-minute chart, so it may not feel like too much. But check this. Remember this golden line that I was talking about earlier? It's a 10-period moving average. If you don't like 10, put 15, put 11, put 8, put 21 if you are a Fibonacci fan. Doesn't matter. However simple a system it is, if you follow the rules, in the long run, you will make money if you follow the rules. So guess what? Closes below the line, you go short. 20 cents on a 5-minute chart. Let's suppose that you don't like 5-minute charts and you prefer 30-minute charts. Last bar of the day closes below. I mean, obviously, if you're doing 30-minute charts, you need to make sure that you are okay to take it into the next day. So the first minute bar is below. So at the end of this bar, you go short, or you go short here. 56.94 down to 56.69. 30 cents again. You go long here. 56.14 to high of 57.26. You will go short here. Again, this, we are already in the next day because this is a 30-minute bar, but if you want to look at a 5-minute bar, you can do the same damn thing. 5-minute bar, Cisco, 56.70 to 57.4. Even in the middle of the day, though I personally prefer not to do anything in the middle of the day, 56.50 to 56.62. Only 12 cents on Cisco systems. But you don't have to trade Cisco systems. You can trade something else. You can trade slightly more volatile stocks. And I'm sure there are enough more volatile stocks which are at $10 than at 200, as long as you don't consider Tesla. But the point is that even on a 5-minute chart, a pin bar will work like a pin bar on a weekly chart. Here is a pin bar. And then look what happened. And now here is a pin bar. Never got triggered. Here is a pin bar, never got triggered. Here is an inside bar. Here is a pin bar, got triggered. And now you go from 56.40 to 56.62. And this is on a 5-minute chart, but this will work identically on a daily chart, a weekly chart, or a monthly chart. Seriously, you want to look at a monthly chart? I'll show you. Let's look at a 10-year chart, right? Closes above. This is a long time ago because the price of Cisco is only $28.93. Now here's the fun part. Okay, Cisco is a system. Cisco is a company that is very stable, right? It's not like Tesla where it's coming up with new shit every other day. It is just doing the same thing over and over and over again. The fundamentals haven't changed, and yet Cisco goes from 28 to 58 without any change in the fundamentals of the corporation itself. Doesn't even have a new CEO or anything of that sort. It's not coming out with better routers. And yet this happens. Any of you old enough to remember the year 2000? That frothiness at the top is when, see, on a monthly chart, we are going into a sort of consolidation mode right now. So something's gotta give, to put it mildly. But the point I'm trying to make is this. A lot of us will go long here, will make money this month, continue to hold on to it, lose all the money that we have actually made, and then turn around and look at you and say, see, this is a lousy system. It doesn't work. I personally know people who think that because you are buying a bullish calendar or a bullish butterfly or a long call because you thought that you were bullish, even intra-trade, this trade, you could have bought a call or a put 6 months out. They literally think that in those 6 months, your P&L for that trade should never go negative. I don't know why they think that, but there are people who think that. It's like, oh, I'm bullish. You said that Cisco is going to go up, but I can see the damn thing going down. And I'm like, no, I didn't say it's going to go up. I said, I am buying a call, which you translated in your head as go long Cisco. I didn't say anything to you at all. All I said was, I am long Cisco, right? But our minds, as I said earlier, will only hear what it wants to hear. And when things don't work out, it'll turn around and say, it's that asshole's fault. You were not even going to be in this trade. You would never have lost money. But that guy told you to go in it, and therefore you lost money. So here is the fun part. You may or may not take the recommendations that I give, but we will still manage the trades together. So, and you don't have to say when you went long or short something, but if you are short Cisco here, and if you are part of this group, we will get together. And when we get together, you say, oh my God, Cisco is going up. I thought it was going to go down. What do you think I should do? And I will help you manage this trade. And one of the parts of the management may just be get the hell out, take your lump and move on. But sometimes we just need somebody to tell us that. You know, it's, and Tom probably knows this more than everybody else, but for those of you who are in the armed forces, this is what the drill sergeant does. He will demean you in front of every Tom, Dick, and Harry in your group just to make you do things properly. But I promise I won't do that. I won't call you, you know, a dirtbag or, you know, something like that in front of other people. But when we are together one-on-one, well, who knows? So hopefully you guys learned something. Did you?
So then this is leading to more about the mentoring, right?
So yes, this, oh, GE is another, okay, Peter Gapsis says, yes, he learned a few did, IAPS, and GE is a $10 stock? Hold on, one sec. GE is a $10 stock. Now, here is a pin bar on a monthly chart. Had you gone short here with your stop at 333, do you think you guys are in a good mood right now or in a really bad mood right now? Heck, if you had enough puts there, you wouldn't even be on this call right now. I know I wouldn't be. And look, after a massive down move, we have a pin bar to the upside. $6 oh, look, 666. Isn't that the number of man and beast?
I think so, yeah.
Yeah, so there you go. Then it moved up big time, and now it is ranging. And when it blasts out of this range, you better be either long or short. See, this was another range here. Inside bar, inside bar, inside bar, inside bar, inside bar. And when it broke out of this range, from 12.6 down to 6.6 within a span of 3 months. 4 months. But how much do you think a 10 strike put cost you when the price was at 12.58? But do you know what we would have thought? We would have said, oh my God, G has gone all the way down to $12. It can't go down anymore.
And never say it can't go down anymore.
Well, but your mind will. Your mind will always say what it should. But let it be, like, let your mind consider it a completely separate entity. It's a child, literally. It's a unruly, spoiled brat. And there are ways to discipline it, but if you use force to discipline it, you will lose because it is too smart for that. So you have to use, you know, something else. You have to tell it different things. In fact, an old man once told me, he said, all your mind really wants are wins. It doesn't care whether it's a financial win, whether it's a, you know, any kind of win. So he actually said, try this And as most people say, he's like, try this for 21 days and see what happens. When I heard what he had suggested, I was like, dude, you must be one of the most stupidest guys I've ever met. I said to him laughingly. And he's like, when I first heard about this, this is also what I thought, but I tried it. So you know what he says? He says, do this. The previous night, you write down on a piece of paper everything that you are going to do tomorrow morning, right? Doesn't matter how small. So you say, I'm going to get up by opening my eyes. So the first thing I will do is open my eyes. Second thing, get out of bed. Third thing, walk into the bathroom. Fourth thing, brush my teeth, make coffee, drink coffee, take a shower, shave. The same damn things that you do every day, you write them down in a list. And then as you do them, you check them off. Now, obviously, in one way, a part of you is saying, but how does this help? But your mind will consider each and everything that you do and check off as a win. And it will feel good about it. The whole thing. I mean, literally, this is us looking at our mind as a completely separate entity within us, or around us, or through us, or all of the above, but distinctly separate. But if you treat it separately, and if you sort of tell him, hey, look, you did so good. We have so many wins for the day. Now let us sit down and write those 300 lines of code that we had to write, or whatever it is that you have to do for the rest of the day. And it will let you do it without bothering you. Am I making sense? It's like, a little kid, you play with the little kid for a little while, then it gets tired. So you say, now you go to sleep. And once the kid goes to sleep, you then go ahead and do whatever you have to do without the kid waking up and bothering you with little things. And that's what the mind is. It's a little kid inside, but we have become so attuned to thinking that it knows, that we sort of just do shit that it tells us to do. I mean, literally, we just do the shit that it tells us to do. And then when it doesn't work out, it blames you. And then you say, oh my God, I suck as a trader. Or I suck at this, or I suck at that, or whatever it is. And it was only when you become mindful, in other words, you become aware of what your mind is saying and what you are doing as your mind is saying all these things, that you realize that this is what you're doing. In fact, that is what the entire basis of meditation is all about. The reason why they ask you to meditate is so that you finally figure out your mind. But when your mind is under control properly, you can do wonders. And I seriously mean wonders. I mean, all the big inventors of our entire history within, they somehow consciously or unconsciously reached that level. And one of the greatest among them was Nikola Tesla himself. Even Edison used to do that. He would take 20-minute naps like 6-7 times a day. He would just lie down, take a nap, and then wake up and suddenly start doing something completely different than what he was doing before.
Edison used to do that too.
Yeah.
He would take 20-minute naps on his workbenches.
Exactly. Yes. Edison used to do that. Tesla used to do that. Even Albert Einstein used to do that. That's how, I mean, his daydream was literally riding on a beam of light, which is when he came up with the special theory of relativity. I mean, I still don't get it in the sense that how riding on a beam of light will make me figure out that something about mass. I would be too busy just enjoying the damn ride, not even thinking at all, or, holding on to dear life, even in my imagination for that matter. But hopefully you guys get the point of what I'm saying. So essentially what Tom and I are proposing is not a What do we? This is not a service where we are proposing where we tell you that, oh, this is a new strategy and this is how you use it. No, what we are going to teach you is this is the way that the market is currently moving, and therefore doesn't matter what strategy you are using, you better be negative delta or a positive delta or delta neutral or a positive theta, whatever the case may be. So, it is very possible that you guys have some strategy of your own, which is probably a great strategy, but every now and then when something like GE does this sort of things, because nobody would have assumed or even guessed in their wildest imaginations that General Electric would actually take a multi-year drop. I know I hadn't. Maybe there were some fundamental reasons behind it, but General Electric, I don't know. It hasn't, well, actually, I wouldn't know. I was about to say it hasn't been in the news either, but then I wouldn't know because I don't watch the news or read the news or even go to yahoo.com or news.google.com or anything of that sort. But this thing, see this bar? This bar on a monthly chart, weekly chart, daily chart, 4-hour chart, 1-minute chart, this works for everything, no matter what the underlying is, because this chart shows you supply and demand or fear and greed. The greed took it all the way up here, something happened, and now the fear has begun, and obviously that fear was well-founded because GE went from 31 to 6. But I missed it completely and totally because I wasn't looking at GE. GE is like AT&T. When it doesn't move, it just doesn't move at all. So it's and very low wall stock, but obviously down here the wall must have exploded significantly. So Tom, do you want to wrap up?
Yeah, I mean, there's the URL aramir.com/Himanshu. We should put that in the chat.
Okay.
People want to get on that list. I'll put it in.
Oh, Ford is a good one. Okay. Oh, you are putting it in? Okay.
Yep.
Yeah, Tom just put on a link in there. So essentially, as I said before, if you join up, we will be looking at many, many different technical strategies. We will be looking at option strategies. We will be combining the two such that our initial outlay, meaning our initial expense of entering the trade, will be as minimal as possible. And we will maximize the trade as it moves in, hopefully, in our, preferred direction.
And Himanshu, when is the first mentoring going to be? And I know you have Trading Group 7, but you said you're going to keep that, and the mentoring will be separate but more in depth.
Yes. We will, well, that one is on Tuesday. We can have it on Tuesday itself at a different time. But I also know that quite a few people, you have jobs, you run businesses, so you may not be able to join up during the day. So,
well, of course, it'll all be recorded.
Yeah, it will be recorded. But sometimes, because we are looking at possible trades, we don't even have to do this when the market is open. We can literally even do this when the market is closed and say, okay, this is what I'm like, for example, today. And again, this is a monthly chart, and today is not the end of the month. But if it was, then on the 30th of the month, if we are looking at a monthly chart, then next day or next week, we would again look at this, or we would have had talked about putting a pending buy order here already. So people will know beforehand what to do, how to do it. Once we are in the trade, how we manage the trade. Like obviously, if you were short here, you bought a put at 28 when this guy was at 29.74, and this guy did this. Obviously, you really don't have to do anything. You don't need anybody around. You are just busy drinking your scotch or cognac. It's when you go short here and then suddenly you have to get out. and then you go long here, and then suddenly you have to get out. And then you have to get out and go long here. And every now and then, now most of the times you will find only certain stocks doing that, but you must have read the fact that markets range about 80 to 85% of the time, and 15% of the time they are trending. Obviously, times have changed a little bit, but after such massive ranges, I wouldn't be too surprised if we actually go into a trading range for the entire market.
And so we're going to start next week. Don't know the date or time exactly yet, but and the cost, do we know what the cost is going to be per month? I think we talked about it.
Yeah, the usual Aromir special, so to speak.
Like what, 125 a month, I think.
Yeah, 125 a month, and again, whatever you will learn, all the strategies, they will all be recorded. So even if you can make it in real time, you will be able to see. You will see the trades that we are all making together. You won't know who's making what trade, but if somebody comes and says, "Oh, I'm long GE here. What do you think I should do?" And you will figure out what we did and whether we ended up making money or not. Of course, in this case, because it's a monthly chart, you will figure out that we made money or lost a significant amount within, and it'll take a few months. But it may have just been a daily chart or a 4-hour chart. See, this is a daily chart, and again, as I said before, this is the golden line. If you do nothing else except go long when it crosses above and get out if it closes below, then you literally, you don't need me. You don't need anybody, actually.
And then Himanshu, for the mentoring, is that going to be how many times a month, or is it every week?
The mentoring we will do twice a month, where once again we will be going through all the different technical strategies and the option strategies, and those will also be recorded. And not only will we go over the strategy itself, but we will look at the charts and say, okay, this matches the strategy that I was just talking about, so let's go long or short. So we will have like a sample portfolio of trades based on different technical strategies, and for each different technical strategies, which option strategy are we going to go with? Are we going to go with just trade calls or puts, or start with calls and puts and turn it into calendars or diagonals, or start with butterflies and turn into double butterflies, or is it a butterfly calendar combo? Whatever the case may be, we will discuss it. We will talk about why I'm saying what I'm saying and what I propose to do in that particular trade. We will, I believe, Tom had suggested earlier, you had suggested, Tom, we will have a separate, like a paper money account for these things that we do, where we will be looking at not only the trades that I'm doing, but even the trades that you find for yourself. And you are like, well, I did this, but now the shit is hitting the fan, so I really don't know what to do. And it's okay to admit that you made a mistake.
And I've set up a private forum for this too. So if you have questions in between these sessions, the 2 monthly classes, then there's still a way to ask questions to Himanshu.
Oh yeah, definitely. Yes, you can ask me questions. Not just that, you will have my phone number. I mean, certain times a day, like let's say from 12 to 1, which is when around the time when the market is not doing too much. And if you feel the need to call me because your trade is deeply underwater, then by all means call me, and I will gladly yell my heart out at you and tell you why you are in this spot and why you shouldn't be in this spot. Obviously, you were there because you were not following the rules, right? As I said before, you do not want to talk to your drill sergeant or your neighbor in the trench as to how you should be using your machine gun when you are in the middle of a battle. And when you are in the middle of this is the middle of a battle. if you bought a call somewhere over here for whatever reason, and you are still holding that call over here, and then you call me, I will gladly yell at you. And I will help you, mitigate that risk. Maybe you won't lose all the money that you paid for that call. Maybe you will lose only 50% of it, or maybe even less. But you will, again, this is, as I said before, this is about us getting together and be inside an Alcoholics Anonymous meeting.
All right. Well, we've got an hour and a half, so normally an
wow.
hour. So we're probably
I keep
running
on
out of
forgetting
time.
how fast time flies when I'm having fun.
Yep, that's true. Or I notice when you get older, it goes a lot quicker than you like to.
Yes.
All right, Himanshu. So we'll probably send out a survey to everybody who signs up to find out what the best day and time is. But are you thinking right now Tuesday sometime or?
Yeah, Tuesday is a good time. I mean, if somebody prefers Friday, there are many who may say, during weekdays, I'm busy. Let's just do it on a weekend. I'm okay with a weekend too. In fact, I prefer a weekend because now you are planning beforehand as to what you are going to do on Monday morning, which is
Okay.
how it really should be.
Well,
So if you want to do on a weekend, that's okay too.
maybe we'll tentatively say what Saturday morning then.
Yeah, we can do it Saturday morning at 10 o'clock.
Okay.
At least nobody will be drunk at that time.
Hopefully not. All right. So again, I'll get an email out with the details for people who want to sign up. Just put your name on that waiting list. Doesn't cost anything for now, and then I'll send out the subscription information, and we'll get going. Probably maybe this coming Saturday. You want to do it, the first one?
Well, this Saturday is the long weekend, isn't it? It's the 4th of
Oh,
July.
4th of July. Yeah, maybe the
Yeah.
weekend after that would be better.
Yeah, so a lot of people will be like gone.
Okay. All right, we will plan on that. So
Okay, sounds good. Yeah.
sounds like some good education opportunities with Himanshu's experience. I'm sure if you sign up, you won't be disappointed. And thank you, Himanshu. It's
No
always been a
problem.
pleasure.
Indeed, yes. And one last thing to everybody here. If you see a red bar high, don't buy a call.
Makes sense.
Red bar high, look what happened. Red bar high, look what happened. Red bar high, red bar high. So many red bar highs. I never saw GE before. But such is life. Okay,
All
guys.
right.
Hopefully you all enjoyed this. Whether you join up or not, I wish you the very best. But if you do join up, your life will change. That much I can guarantee.
In a
So,
good way.
in
Yep.
a good way, yes. In a good.
All right. Well, thanks, everyone. Thanks, Himanshu.
No problem. See you all later.
Bye.
Bye.